In terms of China, I mean, there's huge growth in energy in China, and they're still building like a coal power station every week or two there. So that's where a lot of the growth in demand for coal is coming from, and it's very significant. In terms of Europe, there's a lot happening around decarbonisation, but there's obviously been a huge supply crunch. So there's a big focus, I'd say, on security of supply right now. That is a very big focus. And we had huge volatility in the European energy markets and huge increase in prices.
Welcome to Finscale, the show that takes you to the heart of finance transformation. Every week, Solenne Niederkorn and her guests explore new initiatives shaping the future of the industry. Enjoy the show.
Hello, everyone. I'm thrilled to welcome today Dr. Jemma Green. She's the co-founder of Powerledger, and we're going to have a very interesting discussion about renewable energy. Hi, Jemma. How are you?
I'm great. How are you?
Yeah, perfect. So energy trading is something I know quite well because in wealth management, we were investing for some of our clients in commodities, gas, oil, etc. So this is the aspect I know. And then I started with the podcast investigating a little bit in renewable energies. And this is a very, very interesting sector that is developing a lot. Prior to that, could you take maybe 2-3 minutes to tell a little bit about your story and why you started working in banking prior to jumping into this sector?
Certainly. Well, thanks so much for having me. And I think like just from the little chat that we had beforehand, we've got quite a similar background, like starting our careers in banking and then also now focusing on Web3 and also podcasting. But in terms of banking, I kind of got into it accidentally. I did a finance degree in Australia and then I moved to London, which is a very common thing for Australians to do, to kind of do, a couple of years abroad. And, in London, of course, there are a lot of investment banks. And so it was an easy thing to kind of fall into. And I started my banking career in mainstream finance. I worked in equity derivatives and interest rate derivatives. And then halfway through my time in London, I decided to focus on environmental and social risk. And it just happened to be the bank that I was working at the time, JP Morgan, was realizing the need for greater kind of advisory in that area for companies that wanted to list on the stock exchange or like do bond issuance or M&A, to contemplate the expectations of institutional investors from a sort of ESG perspective. And so I was chosen to help set up the team that was doing that. And so we were helping companies prepare for listings on stock exchanges. So doing things like the risk disclosures in the prospectus and helping professionalize the management team as well. So yeah, that was how I got into banking and then kind of how I traversed from kind of mainstream finance into like the kind of what is now energy, but started off as kind of sustainability.
You also made a PhD?
Yeah.
The time to do it?
Yeah. So I did a master's in the UK in sustainability, and I found that quite interesting to understand really kind of the tensions that exist between, business and taking some of these things into account. And yeah, also how a lot of these things were being done not very well, with like over regulation or doing it in a very inefficient way economically and creating perverse outcomes. And so I started to like think about how these could be done more sensibly, like using market mechanisms. And I basically took a sabbatical from banking. I took like a nine-month break and went traveling and did the Camino de Santiago amongst several other hikes. And I got this idea in my head to return to Australia to build an eco-village. And I eventually shared this idea with a friend of mine who had done a PhD, and she said, you should reach out to this professor at Curtin University in Perth, Peter Newman. And I did that. And I told him I'm a returning Western Australian. I'm a former banker and I want to do this. And he wrote back to me immediately and said, that's a great idea. We should do that in Fremantle. And later, suggested that I do it as a PhD as applied research. And so that's basically what happened, because there are no banks in Perth where I'm from. So I really needed to kind of contemplate a different career for myself. So this was basically the plan. And then halfway through my PhD, I had designed this solar and battery system for the eco village, but I couldn't find any software that would allow the trading of electricity within that. And I just had a baby 7 weeks earlier, my first child, Amelie, and a former banking colleague of mine wrote me an email and introduced me to John Bullich, who's my now co-founder at Powerledger. And he wanted some introductions to my network. He's a technologist and he was developing applications using blockchain. So I invited him to my house, called my mum over to help hold Amelie, and we all sat in my lounge room, and he was telling me, this was February 2017.
Yeah.
So, 9 years ago. And I was like, what is this blockchain thing? Can you tell me about it? And he was explaining all the different applications. It was very early days. And I said, well, could it do anything in my doctoral research and project? And we looked together and saw it could, plus many other applications in the case of energy, tracking provenance of energy in terms of type, time, place, tokenization of environmental attributes or energy itself. We got very excited and we just decided to set up the company like a few months later. So it was not really on the horizon. It just kind of serendipitously, arose.
Perfect. So maybe if we can go back, for the audience, because we have an audience that is very broad. So if you could take 1 or 2 minutes to explain the concept of energy trading to someone unfamiliar with the market, so that we understand.
Yeah, absolutely. So, energy markets pretty much have remained unchanged for the better part of a century. They're what you would call centralized. So there's usually a wholesale market, which you can bid and purchase energy. And there's like a centralized price for energy across a particular market. And over time, it has evolved to be somewhat nodal, geographically based. And then there are other ancillary services which are typically handled by the wholesale market as well. So frequency control, ancillary services, these kinds of things. But this was all based or predicated on energy coming from large power stations, so nuclear, coal, gas, etc., and being brought into the market. But really in the past 20 or 30 years, we started to get decentralized energy in the form of like rooftop solar and like solar farms and wind farms to a certain extent, but a lot of distributed renewable energy. And the market mechanism that brought that into the electricity grids in largely high-income OECD countries was a feed-in tariff, which is a subsidy. And it's like a blunt price that really had encouraged rapid growth of renewables because it was very lucrative, but indiscriminately in terms of where there was actually need for it. And as a result of that, the grid, the poles and wires had to be upgraded significantly to be able to accommodate that energy. You can't just put energy in if the pipes are not there to take that. And if you have too much energy where there's not demand, or you basically damage the physical infrastructure. And so while we've had a lot of new renewable energy come into our grids from these subsidies, we've also spent a lot of money on networks. And that even though you might have cheap renewable energy, when you add it all up, it's actually become very expensive. And the most pronounced sort of example of that is in Germany, which has the highest amount of variable renewable energy, but also the highest electricity costs in the world, and their strong positive correlation between those two things. And you can see that actually across many countries that have pushed renewables into the grid through subsidized feed-in tariffs. This is actually causing these perverse outcomes, which is actually understandably creating a backlash against renewables because it's expensive. And it's really the mechanism, the market mechanism that's been doing this feed-in tariff. And the idea with Powerledger was really a missing piece of the jigsaw puzzle. As we saw, countries started to create regulation, like, for example, in Europe, there's the Clean Energy Package, which is created regulation around energy communities to allow these kind of local energy markets to pop up. We saw the opportunity to create local price signals, which encouraged renewables where there was a need, not just wherever and whenever. And in doing so, drive efficiencies in integrating renewables into the grid without pushing up electricity prices. So that was really why we created Powerledger. And I think the problems that exist in the centralized market was it was all predicated on large centralized generation. But now we have this hybrid system, which has got centralized generation and distributed. And I think we need to evolve the market mechanisms to really do that efficiently.
One question, because I don't know that market at all. Who are the main producers of renewable energy? Are there more individuals than companies?
Yeah, so there is a bit. It used to be that most were integrated. So your energy supplier was also the organization which was owned by the government that controlled the poles and wires, the generation, the metering, and supply. But kind of around the early 80s, really triggered out of the UK in the Thatcher era, countries began to deregulate. So they basically sold off privatized assets and separated them. Mm-hmm. So retailers or energy suppliers, networks, and sometimes they got separated into transmission and distribution, and then generators as well. So there were a lot of new entities created that were previously government owned, but then also in privatizing, new independent power producers started to emerge as well. Mm-hmm. So there are a lot of utilities that still do hold generation assets and are vertically integrated, but there are also many that don't. And that's been very interesting to watch because, for example, in the UK, there are a lot of energy suppliers that were not vertically integrated and didn't know how to hedge their risk, like kind of to come back to the banking world, and went bankrupt. And this caused huge problems. The governments had to step in and reallocate those supply, like the households and businesses to new energy suppliers and prop up the industry as well, because there was a lot of volatility in the energy market and they hadn't hedged their books properly and they didn't have a natural physical hedge bed by being a generator, and the prices went up and they basically couldn't manage, the business anymore. So I think that there's greater notwithstanding privatization now, because of all the energy instability we've had in recent years and the price volatility that's occurred as a result of that, and that's because of renewables, but because of geopolitical instability as well as just energy policy, around turning nuclear power stations off without, in the case of Germany, without having replacement energy lined up, or turning off coal without having alternatives. And I think oversimplification of energy, people are saying, solar's now cheaper than gas. They're not actually comparable because one is intermittent, being solar, and the other is dispatchable. And that, energy is not like cocoa beans. You can't just, store it in a warehouse. You've got to actually have it be time and place matched as well. So I think the oversimplification of energy policy led to a lot of decisions that really caused perverse outcomes and a lot of supply shortages, which created high prices and volatility. And this whole situation, I think, has led to suppliers realizing that they actually are probably better off having a lot of generation assets to provide a natural physical hedge against their book. Otherwise, the hedge costs can be very expensive. Mm-hmm. So I think that there's a kind of reckoning around the idea that privatization, particularly around separation of all of these different actors within the energy space, whether that was actually a sensible idea, because actually in those places, ironically, electricity prices are more expensive when you compare it against those that are vertically integrated. I'd just say one other point on that, which is there is a systems thinking view that happens, and I see this in India particularly, where a lot of them are still vertically integrated, where they make decisions which are on behalf of the whole system for the benefit of the whole system, whereas the individual actors often just make decisions, unless there's a directive, make decisions that are just in their own best interest, and they're not necessarily producing the best outcomes overall. So it could be that privatization works, but I think there's a growing recognition that being vertically integrated actually is a more efficient model in many respects.
You mentioned blockchain. Generally speaking, what roles does technology, and in particular blockchain, play in making that market more efficient?
Yeah, I'd say it depends on the context, but at the very simplest form, just tracking type, time, and place of energy, which I think is a legitimate bona fide use case standalone, particularly because a lot of claims are being made about energy in terms of type, is it green? What's the carbon content? What type is it? Where does it come from, etc. And, regulators around the world are getting really focused on greenwash, like fake claims being made and pricing of products based on fake claims. So I think being able to track, from generation assets to consumption, using like smart meter data, where all that comes from, provides sellers of energy, retailers or suppliers, the ability to add some veracity to their claims that they're making and increase trust with their consumers. And through trust in the brand, grow their customer base and retain their customer base. So I think that is a very important and primary use case for a blockchain in energy. Beyond that, there are many exciting, I would say, more emerging use cases around tokenization of energy, tokenization of attribute certificates like renewable energy certificates, the ability to create more sophisticated pools of liquidity around these assets, which would and have historically been more traded OTC, and are very kind of labor intensive actually to contract and settle. And there's a lot of kind of middle and back office functions associated with that. And I think tokenization of these is going to become a very interesting space. You're seeing it most experimented now in Web3 with Web3 companies, but I think that, the technology will be very likely adopted, particularly in the case of like carbon markets. We've seen a lot of issues with fake credits, and not all of it can be solved by blockchain. I'm not like an acolyte that thinks that, blockchain can solve everything, but there are many things that can actually be solved using that technology, like selling things that have been retired or duplicate credits. If there's coordination between registries, you could stop assets being dual registered, and things like that. So I think there's a lot of exciting things. And, with energy, people hear a lot about this kind of phrase, energy transition. And I really don't like it at all. I think it's a complete misnomer. We're actually in a state of energy expansion. We're using more energy than ever before. Transition makes it sound like we're just going to turn off one thing and replace it with another, which is just totally not what's happening, and not what's going to happen as well. There's 700 million people that don't have access to energy. 15 or 20 years ago, there were more than a billion people. And we're, the real goals are around bringing those people out of poverty through economic development, which is catalyzed through access to electricity. And so we're bringing a lot more renewables into the system and other sorts of energy as well. And that's correct. We want to do that in the most efficient way possible. But there are going to be more claims made about energy, and the need to actually differentiate them, I think, is going to become even more pronounced over time.
You mentioned regulation. My listeners know that I always cover a little bit regulation because it's very important in such markets. Is there a huge difference between different parts in the world? So you mentioned the one in Europe. Are there big differences, I guess, yes, with the US or Australia that you know well, or in China? And if yes, what are the constraints for the European players typically?
Yeah, I mean, there's a lot of differences. Even within America, for example, some bits are deregulated and some bits are regulated. So they're still like owned by government agencies. So even within one country, there's not necessarily like a unified approach. But in terms of China, I mean, there's huge growth in energy in China, and they're still building like a coal power station every week or two there. So that's where a lot of the growth in demand for coal is coming from, and it's very significant. In terms of Europe, there's a lot happening around decarbonisation, but there's obviously been a huge supply crunch. So there's a big focus, I'd say, on security of supply right now. That is a very big focus. And we had huge volatility in the European energy markets and huge increase in prices. So people have had to, because of poor policy decisions and the supply crunches, had to make decisions between things like heating and eating. It's really been very difficult, and I'd say the same in the UK as well. In terms of India, there's also like huge growth in demand as more people are brought into higher living standards. There's still like using dramatically less energy per capita than say America, but I think there's going to be and you can see this already in conferences and the rhetoric from like leaders, a huge focus on security of supply. I think that has become the number one thing, and like local generation of energy production of energy, and then exporting as well. So I think that what we've seen from like the COVID era and since then, through supply interruptions, is a greater emphasis on domestic generation.
Mm.
And there are many that I think, when COVID happened, a lot of people thought, that the world was going to end in many respects, but there were others that really understood that this was a supply shock. And I don't think anyone really anticipated the huge economic boom that COVID, happened post-COVID. But really, COVID monetary policy really stimulated so much economic activity. And you can see that really in the multiples that a lot of assets on the stock market are trading at, like at record levels. Some of that still come off, but I'd say the only area where there's a real utilities and energy, they're trading at historically lower multiples of revenue to asset values. And I think that is really because there's a lack of recognition or understanding about what's happening in energy and the growth in demand. And so, asset replacement, for example, would normally be at 100%. So as assets get retired, like they'd pretty much be replaced and some. But in the past 10 years, we've only been doing asset replacement around 10%.
Mm-hmm.
And so if you think about what that means there's less supply coming online along with growth in demand. So I think we're the idea that we're in a kind of temporary inflationary state, I don't think is the case. I think it's structurally, and you can't just put lots of new energy assets online quickly.
Mm-hmm.
You can't go, well, I'm just going to build a lot of things. These are multi-year projects to actually bring them online. And so I think we're in a new phase of higher energy prices and shortage, and that represents very exciting investment opportunities for new energy coming online as well, with higher prices, albeit that's more difficult for us at the consuming end.
So you said a few words about the way you co-founded your company. It was 7 years ago. In the beginning, what vision did you have when thinking about Powerledger? Where did you want the company to go, and how did it happen practically?
We created Powerledger in May 2016, so we're coming up to 9 years old in May, which is pretty. Yeah.
Yes.
And it was an accident. I, met John Bullich, my business partner, by chance, and a former banking colleague introduced us, and I just had a baby, so I wasn't really planning on creating a company, but we got very excited and saw many applications for the use case of energy. I was really I just had a baby and was looking to kind of really focus just on that. But yeah, it was quite, unexpected and serendipitous. And so, after meeting 3 months later, we set up Powerledger, and our first projects were in Western Australia. And then we did projects in New Zealand and Japan. When you first set up a company, you want to prove, like a startup in tech, that you can build anything. So it was really about getting some proof points and scores on the door that we could deliver the stated product. And then after that, it became, we got interest from Europe and India. And they were like, well, I can see you've done a project in Japan, but can you do one in our market? And so we ended up, with quite a lot of lighthouse projects demonstrating our capability. And we got up to like 14 countries. And then we started to look at what's the actual obtainable market near term there. And sometimes you can't necessarily know that up front. You've got to kind of get into the market and actually do an initial project to see, is the champion that you're dealing with, do they have a lot of influence in the company, or is it just their pet side project?
Mm-hmm.
Is this project aligning with the company's strategy? Is it solving a problem that they've got that they actually want to solve and put a budget towards? And what emerging regulatory sort of setting that they're operating in as well. And so when you get your head around all of that, then you get a sense of what's the obtainable market. And what we decided to do was really just focus on a smaller amount of places where we saw a bigger obtainable market in the near term. And so we consolidated our footprint to 4 countries, and we're really looking at growing our accounts in those places to deliver that growth for our products. And I think that's been like quite exciting, to evolve the business from like a startup to like proving capability in many places, getting more sophisticated insight around where to focus, and then really pushing that. And so, I didn't intend to like become an entrepreneur. It was very accidental, But yeah, I think it's kind of been like, yeah, a baptism of fire, and it's definitely more than a marathon than a sprint. I think that you kind of hear of these companies that, and there are obviously examples where they kind of become huge really quickly, within like 1 year or 18 months, but actually, and um, hearing from like other VCs, they see investment with a 10-year horizon. And I think that is correct, with especially with new and experimental technologies that you're pioneering. It takes a long time for people to understand them and try them and scale them.
Could you please describe the value proposition and the product? Because you gave us some ideas of it, but it's not very clear, I guess, for the audience. So what do you concretely propose and who are your clients?
Yeah, so in terms of our products, I'd put them into like 3 buckets. Peer-to-peer trading, which was our initial and signature product. So that allows households and businesses to trade energy with each other, sharing it peer-to-peer. And we do that by partnering with an energy supplier who allows their customers to do that within their retailer portfolio. And I'll give you an example of that. We're working in Austria with one of the larger energy suppliers, Energy Steiermark, and we've jointly developed a product for them around energy communities. So households and businesses, farms can trade energy with each other, give it to each other as well. And that's seen as like a really core part of their customer acquisition and retention strategy as well, really being very customer focused, customer centric, and empowering consumers to be able to take control of their energy future. Mm-hmm. And then around that is energy tracking. So this is like provenance tracking, and that can be within the retailer portfolio like that, as a kind of adjunct to the peer-to-peer product, or it can just be standalone. Say, for example, corporates want to see all their sites and understand how much energy they're consuming and what are the types of energy, so that can inform decisions around procurement or reporting. So I might be at 60% and I want to be at 80%. And now I know I have to fill that gap, like a power purchase agreement or on-site generation of renewable energy. So I'd say tracking is the sort of supporting piece around energy trading, but can also be like standalone. And one example of that is in Greece. We're working with Metlen, which was formerly called Mytilineos. They're a large conglomerate, and they've got an energy supplier called Protergia, and they want their customers to be able to have those insights as well. So that's part of their offering, so they can attract commercial and industrial customers to supply them with energy. And then the third piece is around a marketplace for trading attribute certificates. And that's actually just in the US. It's called TraceX. It's for automated buying and selling of renewable energy certificates. And I mentioned earlier that that's very broker kind of focused. There are some marketplaces, but they're actually still very manual. And our solution is connected to registries and automates. So you're a seller. You might be a generator of, like, you might have a solar farm. So you've got RECs, renewable energy certificates. And I'm a large corporate. I want to buy certificates from you so I can be 100% renewable, for example. Normally, you'd have to go through a broker or a marketplace that's actually very manual, and ours is completely end-to-end automated. So I can buy them from you, settle the money, get the certificates, all without taking counterparty risk, and also it being very quick. And to answer your other question, who are the customers? In the first 2 products, that's very much energy supplier focused, whereas this product is really generators that want to sell certificates and large corporates that want to buy certificates.
And you didn't have any contact with asset managers willing to diversify some portfolio?
When you say asset managers, do you mean like companies that own renewable energy generation assets, or within the banking sort of sense, asset managers?
Banking.
Yeah, I think that
makes sense.
Yeah,
no, I did one specific episode on this. So energy as a real asset class, a new asset class.
Yeah, so we were very interested in like looking at tokenization of assets, like renewable energy assets, to allow more retail investors to buy small chunks of them. But we wanted to do that with smaller assets like EV chargers and small solar farms that would allow people to do that. But actually, the cost of setting that up, you can't really do it using blockchain technology solely. You have to do it using traditional regulation. And the costs of doing that are so much that you would need very large assets to make it viable. Like the cost of doing so would erode the return. And so it just proved to be too difficult, sadly. So we shelved that idea. And in terms of asset managers, I mean, I think you could, in the same way you're starting to see like ETFs with like Bitcoin and Ethereum, I think you may start to see that with like, a portfolio of energy assets that could be tokenized and people could invest in those. But you'd really have to satisfy yourself that you need to do that with blockchain and it would actually be more efficient. And I'm not convinced that that is the case.
At
Yeah.
this stage.
At this stage, not to say forever. And thanks for, adding that comment in. Yeah, I think that the markets would need to evolve a bit to allow that to be done efficiently. And, on that point, I think we're now entering that phase. Actually, blockchain used to be a dirty word, and I think that we are moving into a new era. With the new US administration, and I think recognition that these are really important technologies, and less kind of regulation by enforcement, which we've really seen in the US, to more innovation mindset. And I think that could be, I think it's great for the industry and could be really great for these kind of second kind of or tertiary or secondary kind of areas for growth using the blockchain technology.
And on which blockchain did you develop your solution?
The answer to that is 4. So we actually started with a fork of Bitcoin. Then we experimented with the JP Morgan Quorum blockchain. Then we ran a private consortium chain based on Ethereum. That was very slow, especially when you're getting a lot of smart meter data. So a few years ago, we hard forked Solana. After looking into lots of technologies, we saw Solana's speed was really just perfect for the energy use case. And we actually operated that initially as a private consortium chain, but then we made it public to allow us to test upgrades and see how that would go with our product. And it worked very well. And so the next logical step was us to migrate to Solana mainnet, which we did in October last year. So just recently. So we moved all our products onto mainnet. So we're now on Solana. And we're very happy with that decision. I think it's a great protocol and the ecosystem is very exciting to be a part of. Mm-hmm. There's great tools. So I think it's going to be very interesting to see what happens with Solana. You can already see quite a lot of new projects choosing that in the first instance, as well as a lot of existing Ethereum projects contemplating using a Solana or migrating entirely.
It's true. I did a very interesting episode on a layer 1 called Near Protocol. I don't know if you've heard of it.
Yes.
I wanted to, we have a bit of time left. I wanted to talk a little bit about Powerledger Ventures because I saw that you had created that investment arm. I want you to take a few minutes to tell us more about the type of companies you're investing in, the reasons, how would you manage this, what are your contacts with other VCs?
Yeah, that's been very exciting. We started off as an Australian company and we moved to Zug in Switzerland about 1.5 years ago. And we did that because most of our clients were in Europe and traveling from Australia, but by now I have actually 3 young children and I just wanted to be like closer and travel less. When we moved here, we started to meet a lot of other, like in Perth, there's not a lot of tech startups and scale-ups. So I'd really only meet people when I'd go to conferences. But being in Europe, we're coming across so many other companies that were looking for investment and in the Web3 space and in energy. And we came to get really excited about some of those companies and wanted to allocate some of our balance sheet to invest directly. So at the beginning of last year, 2024, we started venture partnering. And last year, I think we did due diligence on 7 or 8 companies and we made 1 investment. And that investment is in a US company called Superlogic and its sister company, Spree, which is basically a system for using points like Amex points. Warner Brothers, I think they also allow people to buy experiences using those points. So flights, hotels, tickets to concerts, etc. And they're launching a sister product on Solana called Spree, which is allowing people to use their dust to buy things as well. So and they've got a lot of partnerships with hotels and airlines as well. Mm-hmm. And we see ourselves supporting them around the purchase of offsets for those products too. And so, we made that first investment. But I'd say, in addition to our own products, which we're developing, we can invest, in other companies now as well. And I think that's very exciting because we're, entrepreneurs and we understand a little bit about what it's like, and hopefully can be helpful than just sort of investors that are putting money in, but also provide some additional kind of contributions to their journey.
But how do you find time? You have 3 kids, you manage your company, you also run a VC fund. So
well,
what is your trick?
it is a VC fund, I guess, in that sense, but we're not taking third-party money in. We're really, just our own balance sheet.
It's a CVC fund. Sorry, it's a CVC fund.
Yeah. Unlike, I would say that's an important distinction to make, because, the strategy of a lot of VCs is to spray a lot of investments around, and they want to, put the capital to work because they're going to get their fees, and they might have raised a lot of money and they want to allocate it all when perhaps the market's not even big enough to accept that amount of money, and they end up making a lot of deals that you find out are bad later. But by that stage, they've already got their, 2% management fee every year, when really they should be probably giving the money back. In our case, we've actually invested our money already, and we're very happy with the investment. So that creates actually a very high bar for investing. One, we don't have LPs that we have to deploy to satisfy. We're very satisfied with where our current position, and if something is very exciting for us, then we would. So I think that means that we're not analyzing 200 companies a month. That's just totally not what we're doing. And I think that means that, it isn't a crazy frantic experience that perhaps what life in a VC is like. Ours is a little, I would call a bit more opportunistic.
Yes.
And
I was about to say it. It's an opportunistic approach.
Yeah.
Okay, so what are your next steps with your company?
I would say really growing the customer base for our peer-to-peer product, getting more users for our marketplace for trading renewable energy certificates, and also, understanding more about companies that we might invest in for in 2025. I'd say they're the 3 focus areas.
Thank you. So, Jemma, I generally ask for a recommendation, a book recommendation, or thus something that you like, but I would like to ask you a recommendation of content for the audience and the listeners, because it's a very, market that people don't really know, I guess, quite hidden market. So what content would you recommend for us to improve our knowledge into that renewable energy market and the future of energy markets?
Oh, well, I actually came across a fantastic report last week by a private equity firm called Quantum Capital Group. And the report is called Advancing the Global Energy System. And this report, I think, covers, really synthesizes everything very elegantly. And it's their 2024 report. You can find it on the quantumcap.com website. So if you just want an inch-thick view of energy, that would be the most up-to-date place that I would go to. The other place is JP Morgan publishes an annual energy paper each year written by the Chief Investment Officer, Michael Sembalest, and Vaclav Smil, who's a Canadian energy academic. And that is a very good synthesis as well. And Vaclav's written a book. I know you didn't want me to give you a book.
Yes, you can. I love reading.
I don't the title, I think it's called The Way the World Really Works or something like this. And particularly chapter 4, which is called The 4 Pillars of Modern Civilization. This talks about steel, plastic, ammonia, and concrete, and how those things are really fundamental to our functioning civilization. And currently there are no economically viable ways to produce those at scale without fossil fuels. And actually the infrastructure that we've got for those took decades to create, and replacing it is a multi-decade project. Mm-hmm. I found that chapter particularly sobering to understand, not to lose hope, but actually to be really practical rather than Pollyanna and rainbows. Mm-hmm. So we can understand the energy problem and actually solve it systematically and sensibly as well. So they're the places I would look if people want to dig further.
That was very, very interesting. Thank you so much for going into so many details. I learned a lot, and see you soon. Bye.
Thank you.
Thank you for listening to Finscale. Don't hesitate to subscribe to the newsletter on Substack to stay up to date with the latest innovations. You can also find the podcast in audio format on all listening platforms and in video format on YouTube. See you soon with Solenne Niederkorn.